So Saxo is celebrating its 30 years of existence this year, and we've talked about in our one-on-one conversations the sort of developments we've seen, starting in sort of the early 90s, before the internet was breaking onto the scene in a big way, at least in the financial markets. We've been through a big tech telecom bubble and bust. You're our bubble expert, Kim, in terms of the technical defining what that is. Another bubble in the 2005 to 2007 housing crisis and response to that. And then even with the pandemic, of course, being the latest big pump and dump in markets, if you will. So we're connecting a lot of these ideas we've had in our one-on-one conversations with what's going to be happening over the next decade, 20, 30 years. It's impossible to predict 30 years into the future, but I think it's important to consider how the last 30 years have shaped the global financial markets, what we can learn from that, and at least what we think might be shaping up in the decades to come. One of the starting points I can think of as we're looking at markets here in late summer, let's call it, of 2022, is we've seen a remarkable pandemic response, and what, to many, certainly in key sectors, felt like a bubble, Kim, in markets. U.S. equity market to a certain degree, certain pockets of the equity market for sure, parts of the crypto space. Are we in a bubble? Do you think we're sort of have completed a bubble sequence, or do you think there's more to go? And we don't need to speak specific levels, those are going to change before this goes live, but are we in a bubble? And what will be the final resting place if this is indeed a bubble sequence we're seeing playing out here?
I do believe we are in a bubble, or we are actually unwinding the bubble at the moment, or it's imploding, as we can say. We have seen this sell-off since New Year, and now we have bounced back a bit, and where we are right now, it's really hard to say, of course, but when we're talking about bubbles, they have the same characteristics, they have the same shape. During the build-up, where you have one, sometimes two larger corrections. So the market always comes down to at least the last correction on the way up, but usually all the way down to the first one. And sometimes, which we saw during the dot-com bubble, when it imploded, it came all the way down to the base. And that's what we usually see. And I do believe we have this bubble scenario or bubble characteristics on the way up. And we have seen that also here with all the retail investors coming in late to the party over the past couple of years. We saw that back also in 2000 or in the late 90s, also retail investors suddenly flocking in at the top of the market.
Yeah, and Peter, we've looked at a couple of these sort of drawdown dynamics you've seen from market tops to wherever they finally bottom out. There have been some talks of an analog with the 2008 situation, but you've commented before, you see some very different characteristics to this bubble, especially relative to 2000.
Yeah, I would say that in 2000, you had equity valuation completely decoupling from the long-term interest rates in the US. So back then you had 6.5% on the US 10-year, and you had earnings yield going to 2%. So that spread just became extremely overstretched. This time around, you had the dynamics of explosive earnings growth in technology companies, major technology companies, almost monopolies, coupled with very low interest rates. So that fueled the equity valuance, but there was much more a link between the fixed income and the equity market this time around, whereas in 2000, completely disconnected. I think the bubble stock theme basket we created, that is really where we saw the big bubble, right? And where we have corrected almost 90% from the peak in a lot of these names. I think that's sort of, from where I'm looking at, that's the main difference. And then in talking about the drawdowns, I think the 1970s drawdown, I think potentially could be the one type of path that we will follow this time around, where it's quite a lengthy drawdown, and that's the reason for that is that typically from a macro perspective, in order to have a short drawdown, you need to drum up demand very fast, but that requires that the supply side is working very well. But in the 70s, the supply side was not working very well, so it takes longer to fix the system, and that means that it takes longer for the equity market as well to recover to a new peak. So I think that's why I'm really looking at this 70s drawdown as a way of inspiration for what could happen.
Yeah, and also practically speaking, if there is a supply side issue that's not solved, let's say you get a recession, so you get the demand tailing off, you get prices coming down, but when it comes back on board via stimulus, via the classic bubble cycle or stimulus cycle, the supply can't catch up once again, and you're getting a stop-start dynamic. That could be a risk. And Stijn, I mean, we've talked about that, you've written about this extensively, that we're in this sort of the sort of bubble and bailout cycle, the serial bailout cycle that we've been in since the 1990s, really. Greenspan, the maestro, being the classic the classic figure you associate with these bailouts. What's take us through what you're thinking in terms of, we've seen the bailout. You mentioned that the first one is the LTCM crisis in 1998. Pandemic, is that the last in a chain here? Or are things going to be different from here on out relative to this ever falling rates, ever bigger bailouts this cycle?
Well, as a good economist, the answer, of course, is yes and no. So to make sure I get to be right.
Or maybe a good technical analysis.
And then throw in a bit of technical analysis. But the LTCM stands out because that's when we created the moral compass, or the lack of moral compass. We created a model where every bump in the road was met by increased financial leverage and a reduction in the volatility. So what many economists talks about is the Great Moderation. The Great Moderation meant effectively that the expected quarter-by-quarter GDP fell by 2/3 in terms of volatility, and the overall speed limit of the economy came down dramatically. That has been unsettled, partly because of COVID, which was an acceleration process, but more so because we cannot continue to be living in a non-productive area. And I think that's what people forget, that at the end of the day, if you boil down economics to just one concept, it is that everyone needs to be productive. If you're not productive, you are destroying capital and you're destroying infrastructure on a daily basis. And that is what you see when you look around Europe, US, Australia, Asia, everywhere. You are simply only able to operate a world today where you have negative real rates. Negative real rates being the fact that inflation is higher than the actual return, which is a financial repression. It's basically penalizing people who are saving and keeping a good household economy, a sound economic policy, and it's benefiting everyone who has a leverage and a stupid platform like the companies Peter keeps talking about, which produce absolutely nothing. I mean, what's the benefit to me of having my underwear delivered by Amazon 24 hours earlier than it used to? I mean, that's absolutely ludicrous, because we need to get back to the fact where the tangible assets, the real economy, is a bigger component of the overall. So the answer is no, we cannot. We can continue to do bailouts, but that will be at the cost of ever lower productivity, ever higher need for real rates to be negative. Or we can move to an agenda which is forced through this inability to deal with both energy but also food constraints in a global economy.
Yeah, but there's also the issue that, in practical terms, why the next bailout is going to be that much more difficult, because with each bailout, you're leveraging up something to bail out the thing that was in trouble. And in the global financial crisis, of course, the major investment banks were in trouble. They had to get bailed out. Where does the leverage go? It goes to the public balance sheet. That's reached levels where now it's become a critical mass, and the public balance sheet can't afford these higher interest rates. Therefore, you have to have financial repression to continue to fund the sovereign. Where does this end? I mean, we have to have inflation to deflate that debt load, don't we?
Yeah, and that's what happened after World War II. After World War II, you basically accepted a very high inflation rate to deflate the amount.
The real
effect of the debt issuance that was going on to, of course, to finance the world wars. This time around, though, however, the genie is out of the bottle. We're seeing very, very high inflation rates. And the inflation rate, unlike what people think, is not based on Ukraine. It wasn't a good factor, a mitigating factor. It was an addition to already was in place. And that is the fact that we have probably the most naive energy policy ever in history. The most naive being the Germans, obviously, who 6-7 years ago decided to abandon all kinds of atomic powers and other facilities, and decided that they were going to be dependent 100% on Putin, similar for Italy, similar for a number of countries around the world. So Europe became, capital rich but energy deficient. And now we're paying the price because the global market, the rest of the world, ex-US and Europe, needs a higher and higher share because of demographics, because of higher growth rates, and simply because they want their share of the overall, both CO2 emission, but also the electricity generation overall.
So I wonder, this time around the cycle's been so different because the interest rates in Australia have settled sort of towards global norms. You've seen an incredible compression and flattening of where interest rates can go, even out to 10 years, et cetera. So we haven't seen Australia participating as much in this this bailout or this bubble cycle. But as with every economy, these persistently lower rates are creating bubbles in certain sectors, and one of those sectors is housing, where it's a tremendous problem. And we talk about the bailout cycle, you're sort of throwing leverage onto the public balance sheet. If you look in the US, the balance sheet in the private sector is actually remarkably healthy. If you look in Australia, and economies like Australia, open developed economies, that process hasn't happened yet. The sovereign balance sheet still looks pretty decent, but you see this very, very indebted private sector. And I wonder in a case like Australia if the next cycle sees that shift as well, if you're just further down the stream on this.
I think the Australian property market is on the verge of the bubble bursting. So the Australian consumer is quite strong, they are quite resilient. However, we have seen household budgets fall. And that being said, property lending has fallen from its peak. And we're seeing margin compression in the largest organisations in Australia. So the Australian banking sector is starting to, see some loose threads. So what does that mean? When that translates to share price performance, we're starting to see better returns, not in the financial sector anymore. So traditionally, international investors might look to invest in Australia because Australia traditionally is one of the world's largest dividend payers. That being said, we're seeing a lot of clients now shift their preference for, income security to investing in commodities. So commodities have become the new source of capital stability and of dividend strength. So, and that part and parcel is not only because of the demise of the property sector, but also because household budgets are just far too stretched with runaway inflation.
You have financial repression, so you have a policy rate that's set inappropriately low compared to the actual inflation. That means you need to have investments in things with pricing power. So the companies that are selling goods that can be priced at inflation or above. Who are those companies? Where are we investing?
Well, I think the biggest risk to portfolios right now is inflation. We haven't had inflation for 40 years, so we have been used to not talk about inflation, but it's a real risk now. And one of the conversations we have, you and I, John, was the tangible versus the intangible world. The friction that Steen also talked about. And the tangible world is staging a comeback. And the physical world, we've been under-appreciating and under-investing in the food and energy, the basic foundation of the economic pyramid. In the very top, we consume Facebook videos and do TikTok videos, but it all stand on that strong foundation, and we forgot that in our part of the world. So I think the clear answer is to invest in commodities to mitigate that inflation risk. We also have this deglobalisation that we'll be talking about later, with the world ripping apart. Part of that is that we will probably come out of a 30-year low point in military spending. So again, very tangible. Military spending will definitely rise from here. We have a huge energy crisis to solve. And as you and I discussed, John, I think that's also very tangible. And my recent bet is that we will, and that's also what we saw with the climate and tax reform in the US and what Warren Buffett is betting on, is that we will have a parallel track. The old energy, oil and gas major, will see a lot of investments, but alongside a lot of investments in renewable energy. And then we need to bring back nuclear power that Germany tossed out of the window. Because I think the key thing here is that just like the world became too dependent on China, on manufacturing, we became here in Europe too dependent on Russian energy. And we have basically made it concentration risk everywhere. So we have monopolies in the corporate sector, we have concentration risk in manufacturing and energy. And I think the key going forward in the tangible world in the energy crisis is to diversify. We need a lot of different sources. It's about mitigating risk from here on. You can say the first phase and evolution of robotics and automation really created stunning productivity in the manufacturing, to the tune that you have factories in Japan with only 80 employees producing 2 million televisions per month, right? That's because of robotics. And also when you see modern car factories today, I think the next arc, the next 30 years is about how can you actually automate, in a good way, hopefully, the services sector. Because if you have a massive expansion of the elderly people, they're still going to restaurants and do things in the services sector. But if there's a shrinking pool of young people and in general the labor force, something has to bridge that gap, and that's the automation and robotics.
When they got to zero, you had to do QE so that you could get an effective rate that was minus multiple hundreds of basis points. Kim, I know you've looked at technically at the, and a lot of people have looked at this, the very long-term U.S. yield chart, whether it's the 10-year or the 30-year, and how you draw your trend lines. A lot of folks are saying this was just a really odd sort of bullwhip effect of the pandemic stimulus, and we just shot up a bit more on these rates. They're going to come back to zero, come back to normal. But it really is a technically massive development, this big trend break in yields.
Yeah, it is, and it has. And if we look at the US 10-year or 30-year, it doesn't really matter. I mean, we have, 40 years of falling interest rates. And maybe that's a bubble that a lot of people haven't looked at. They're talking about bubble in equities, but that's also a bubble that is now, it's just an inverse bubble, so to speak, that has actually broken, and it's broken its falling trend. And we have seen over the past few weeks, we have seen how the interest rate has been hovering around 3% in US. So that seems like it's kind of the bull-bear pivot, but it has broken. It has broken its falling multi-decade trend.
Yeah, and part of that, what Peter's referring to in terms of demographics, and these low interest rates and financial repression. So you have inflation or you have an interest rate that goes down to zero, and it means that people are running around chasing around existing assets, and housing has been the massive one worldwide. China is confronting its own housing situation and housing buildup. Is there anything more unproductive than chasing around bricks and roofs above your head and filling them up with expensive stuff? I mean, to my mind, that has to be the number one thing that needs to change if we're to allocate capital to something more productive.
I think Australia is a great example of a non-productive society. The majority of the stock, ASX, is banks and real estate related, if you take out the commodity side. And what is remarkable about banking and housing and real estate is that it has zero productivity. I mean, Peter's house is not getting more productive. He may put in solar panel and pretend it's more productive, but in terms of his contribution over 100 years, it's zero. But coming up with new solutions for desalination of water or vertical farming or the next iteration of energy is a good difference. But I think the advice or the takeaway here is that I think what everybody needs to ask themselves, and I mean that literally in everything they do every day, is that when you stand in front of a decision to invest or not, to talk to your wife or to what school you should go to, you need to ask yourself, what I'm about to engage in, is it productive or not? It's fine if you don't want to be a productive person, but if you want to be a productive person and be part of the solution, you need to ask yourself, is what I'm doing right now productive? So when you buy a stock from Peter's baskets list, you got to say, is this part of the solution?
From an equities point of view, you're touching on an interesting point, this whole concept of time, right? And time is linked to the interest rates. And that's what happened during this cycle we just had, that by taking interest rates as low as we did, we distorted time basically, and we created a system where we would allow companies to run for 14 years with constant losses, right? And I think SoftBank to me is probably the pinnacle of that era, tossing $100 billion towards these WeWork and different type of companies that, as Sten would say, it didn't really make a mark on the world, or at least it didn't really made a massive shift in productivity. And I think all of that is coming to an end because we're changing the time dimension again by raising interest rate, which is the natural function when you have hit a resource constraint because it really pushes the inflation rate high.
And accelerates time again.
Yeah. But I would still argue, great points, I would still argue you need that real interest rate to go positive to really accelerate that effect. It's no good if you have 7% inflation, but your policy rate is 2 to 3%.
So touching on the extension of life, touching on innovation, I think that one thing that we kind of really haven't touched on is with productivity that has brought about better healthcare. And so for a potential investment opportunity, we're seeing a lot of med tech companies, I guess, if you will, really lead the advance in terms of productivity. So I guess everyone here in this room is triple vaxxed, and I guess we've never seen a vaccine become so widely given. But I think probably more of the focus would be bringing it back to one of our outrageous predictions last year, and that's the increasing longevity of human life. So we spoke about the human life potentially being increased by 30%. And I think this brings to light that we will be focusing also on the medical technology sector.
I think another important topic we need to get to is deglobalization. We've seen the narrative goes that there was this effort to post Cold War to bring the former Soviet states into the sort of international fold and to admit China into the WTO, assuming that via trade, via sort of a common prosperity that arises through trade and interacting, that there would be some sort of natural drift towards, in these economies, towards the so-called Western norms or democratic norms, and we could all live happily ever after. The problem has been, of course, that here we are faced with suddenly a hot war in the ground in Europe, Russia invading Ukraine, a clear leveraging up of the whole energy situation and the leveraging of energy supplies into Western Europe as a tool in the economic side of that war. We have US and China in a massive confrontation here. People are second-guessing their supply chains, both from practical terms post-pandemic, but as well on a government level because of do we have incompatible systems? Do we need to pull apart? So where do you think we are? I'll let you kick this off, Stan. Where do you think we are in this process? Is there something that's going to accelerate it besides Russia, Ukraine, or you can talk to that point as well? Just place us where we are in this process, you think, and how quickly this could unfold.
I think the bigger point is that the rest of the world wants their share of energy and they want their share of the commodity that is in the ground and which they classically own themselves, which means they're going to be sharing less with us. That's a fragmentation. What is also a fragmentation is that the Ukraine war made Russia weaponize natural gas and oil into Europe, which is dependent on the same oil. And now we are in a race to be the most green ever in history. And in that race, we are very, very reliant on actually creating and benefiting from the commodity sector and the commodity producers. And again, we come up short with the ideal is great. The challenge is people are up for it, but we can't actually execute it because there's too little of it. So this fragmentation of weaponization, I think, is only continuing. And unfortunately, what I see happening is that it continues until it breaks. I think the next evolution is probably that China, they're not going to stop exporting electronics goods, but they may slow it from the volume of 100% to 70, and all of a sudden it takes longer to get your stuff in the U.S. As you know, John, being American, Walmart has a high component of Chinese imports. So the manufacturing model in China did two things to the world. It made the division of labor work, which is meaning cheaper labor. But more importantly for what goes on now and into the future is that it was also an arbitrage on energy. Because as the Western world, Germany turned off the nuclear power, they wanted and producing a country where there were cheaper energy. India, Vietnam, these places still can today use 60-70% coal. So it was an arbitrage on labor, it was an arbitrage on energy, and that is now totally reversing, which makes me again and again say anyone who believes that inflation is coming down to 1-2% in my lifetime, I think they're wrong. Simply because you cannot go from a globalization where everything gets cheaper to a deglobalization fragmentation where you are strategic, where you are resourcing, where you are thinking about green. All of that, if you think about it, has a price structure which is more expensive. It is strategically probably better. The quality can improve, but the cost of it will significantly increase over time. So that means basically the bottom line for the investor is that, as you said in the other segment, that if you accept that inflation is not coming down, then the terminal rate or the level of interest rate that need to clear the market needs to be higher, simply because you need higher adjusted risk premium in order to face the future inflation that is coming, both from the debt side, but also from the productive side.
So some of the deglobalization and the awareness around the limitations of our current supply chains was, of course, laid bare by the whole COVID pandemic response and then the crazy stimulus that led to a big upsweep in demand around the world. Semiconductors was one key area, Peter. Ironically, it was the sort of the low-quality semiconductors that were creating havoc for the auto industry. So there's that, but also looking forward, if we are deglobalizing, where are the biggest bottlenecks? What industries are facing the biggest challenges in this process of pulling apart and maybe trying to diversify your supply chains?
Well, I think the era of globalization was also an era of over-optimizing the world with as little buffers as you could get, because there was, maybe it's the wrong framework, but letting capital markets and the economy just set them free and let them allocate wherever they wanted, it meant that the world lost its strategic direction. And I think the end result of that was that we got a global economy that got extremely concentrated. And so 90% of all solar panels are produced in China. 95% of all semiconductors in the world have a little component coming from Taiwan. And we can go on and on and on and on with this. And I think China was the first country on a large scale that defined self-reliance as a key policy objective. And I think what we're seeing now is that Europe and the US are following through with that same policy objective, because Europe needs to be self-reliant on energy as much as possible to get maximum strategic flexibility against Russia. The US is in a predicament because the whole modern world is predicated on semiconductors, and China just recently had a major breakthrough that spooked a lot of people in the semiconductor industry. They delivered 7 nanometers, the company SMIC. They need now to prove that they can mass produce on scale this 7 nanometers, and we still have 5 in South Korea, Taiwan, which is part of the US strategic system. And that's why we have seen the US doing this US CHIPS Act, and that is to bring back semiconductor manufacturing in the US. And right now, as we speak, Intel and other large semiconductor manufacturers are setting up massive plants in Europe as well. So it's deglobalization is also about this technology race where we just basically carving the world into 2 systems, and these 2 systems needs to be self-reliant, and every country in the world will be asked to pick side.
Jessica, in the case of Australia, it's maybe certainly less on the semiconductor side, but in terms of here you have an economy where so much of the physical side of the economy is digging stuff out of the ground and sending it to China. Yep. That's been a very profitable business for obvious reasons for decades. But you have a strategic alliance that's very much with the US, UK, the Western alliance. Mm-hmm. That's going to be a difficult tightrope to walk, I would think, into the future. Is there a sense of this impending the process of deglobalization and what it will mean for Australia, or do you think that Australia is complacent here?
Pretty much, yeah, the latter. So we're definitely complacent, and our government is forever nimble with their trading partners. So Australia also got the short straw as well, a little bit, in terms of the trade war. So we saw China kind of reduce their ties with Australia on one side in terms of reducing their coal, and also to a smaller extent iron ore, which is of course the key element for steel and pivotal to their urbanisation. But I think over time, Australia definitely has got the short straw. I think we're very, very, very much dependent on other nations for our success. So by virtue of the fact that our largest exports are iron ore, and you strip away iron ore and you strip away fossil fuels, LNG and coal, and Australia's surplus would quickly pivot back to a deficit, which has been at for 3 decades. And so for the first time in 3 decades, Australia has consistently produced record surpluses simply for the fact that we've been exporting a record amount of fossil fuels. And part of that is to Asia. So we're very, very much dependent, definitely caught by the short and curlies, if you can say that.
But isn't it, if we talk about Eurozone, and Peter talked about dividing the world or disintegrating, and you have to choose side. We have the energy situation, Europe, Russia, but what about the whole rare earth material, which we need more of to produce all these semiconductors and solar powers and so on? I mean, we don't have that much in Europe that we want to dig out, at least because of pollution. So where do we get it from?
China.
We are China. So, but if we're dividing, okay, then we have Africa, but China,
Australia.
China has more or less conquered a large part of.
Well, my understanding, my limited understanding of rare earth production is that they're actually less rare than the name implies,
Yes.
and that most of the difficulty in getting these things in their concentrated form is it creates a heck of a lot of pollution.
Exactly.
A price that China has been willing to pay for that.
But we will.
They exist in Australia, they exist in other places, but then we have to be willing to bring the cost of those, getting those minerals higher by producing them ourselves, but as well either paying the price pollution-wise or having a very expensive process to avoid some of the pollution outfall. The winners in this, I know you mentioned in our one-on-one conversation, we had a little bit of the same discussion, Peter. Winners from deglobalization, you're going to have to reshore manufacturing, you're going to have to diversify supply chains. Where are we seeing the biggest winners in a deglobalization process? We've talked a lot about the losers. Stein mentioned winners being potentially some sort of a unification trade in Europe and peripheral debt. Where are the big winning industries that where we're going to need to see more investment in the equity space?
Well, I think, as we've mentioned before, commodities, defense, oil and gas, and renewable will move in parallel together to solve the energy crisis. There are definitely opportunities within nuclear power, so that's investing in uranium. That's the easiest way to do it. Semiconductors will see a massive increase in investment over the next 10, 15, 20 years, and also because semiconductors is the essential thing that makes every single object in the world speak to each other and be connected and make intelligent solutions. So that's a huge winner going forward. Cybersecurity I haven't mentioned, but I think as well in a deglobalization and in an increased tension and a world that is very digital, cybersecurity is another frontier in warfare. And we have seen an acceleration of attacks, and I think when we live in the West, and we tend to get the perception from the media that it's only a one-way function, that it's only Russia and whatever Chinese or whatever hacker groups you want to come up with that attacks the West. It goes both ways, and I think the key thing to mention about cybersecurity, I think that industry is probably very much at the starting point as where the PC and the operating system of Microsoft. We're back in the late 1980s. So I think it is a 30-year trajectory, and it's going to be a necessity. You cannot operate either Saxo Bank or the Danish government or the US government for that matter without having very strong cybersecurity. So the demand of that will be very strong, and it will be. And what makes it really interesting is that it will be decoupled to the economic cycle. I think that the lesson we can draw from history in terms of the equity market and the economic evolution of our society is that there's never been an industry that have had a foothold in the top league in terms of power and market value. In the old days, it was the canal companies, then you had the railroad companies, then the oil and oil refiners, Standard Oil came around, then came the car companies, then you had the energy companies. There's always a new industry that comes around. And now we've had 30 years of digitalization. I feel pretty comfortable that looking ahead, then over the next 30 years, it won't be the Apple, the Google, the Facebook that control the equity market. It will be something else. And I think, as you said in the beginning, it's very difficult to predict 30 years ahead. But if I try, then I think it's alongside. I mean, Sten and I had a conversation with Cathy Wood, and you can say a lot of bad things about maybe ARK Invest and their approach to some of the things they have done. But I would say that one of the things I took away from that conversation we had with her, Sten, was that everything around, the human genome and our ability to pre-screen for cancer, cure all sorts of diseases, which can increase the productivity life of people for longer because we're more healthy for longer, I think will be extremely critical, and especially in the era of demographics that we're looking into. So I think biotechnology companies, MIT has coined this century as the century of biology, where we have been in 2 centuries of physics and the machine age and the computer age. And this century is about biology. I think there will be a lot of opportunity, and the big companies in the world will be the ones that solve our healthcare issues and diseases, and the other pillar will be the new energy industry. There will be something else in the future, and I think that industry will also be big, because those are the 2 biggest things that we need to solve. And around that, you have a lot of different interesting technologies, like as Sten mentioned, desalination of seawater. I mean, we're depleting our freshwater resources around the world, in Chile, California, South Africa, India, in China. There will be a huge need, and it's extremely energy intensive. So the energy is sort of the core technology we need to solve.
But even in a case like Australia, I was really shocked when you pulled up this data point, Jessica, that here's a country that's digging endless amount of coal out of the ground, and yet there was a few years back they were having brownouts in their electricity system, and you still have an electricity system that's run, was it 60+% on
60%.
coal, and climate science or climate developments in recent years. It seems like that some of these summer situations in Australia are getting very, very extreme. It seems like the urgency would be greater in Australia, and then I'm hearing you're still burning 60% coal for electricity. Is there more urgency, you feel like, in Australia than other places, or is there still a sense of complacency there as well?
It's a bit of yin and yang. So I think if you look at the performance of the share market, the market is telling you that they're favouring clean energy companies for the future. So we're very dependent, as you said, on fossil fuels. 60% of our energy comes from coal. In fact, as we were talking before, our coal exports keep on hitting record high after record high. And that's not even going to China yet, because there's currently some restrictions with sending coal exports to China. That being said, the Australian government is actually working on relaxing that in cohesion with China. But I think at the moment it's a school of 2 thoughts. So the essential energy that we need, so the critical energy. So the fossil fuel companies have been leading the performance of the share market, as they have in the US as well. So the fossil fuel companies in 2022 in the US and in Australia have been the best performers. So oil, gas, coal companies. However, as we were saying a little bit earlier, over the last several months, we've seen back to the days of old in a way, if you will. We return to the pre-COVID crash days, where lithium companies and hydrogen companies are fueling the rise of the bounce back in markets. But when the rubber hits the road, it's really up to these companies to start producing lithium, and in order for it to be sustainable, it needs to be green.
Yeah, but you also have, Australia being a very hot country with lots of open land and desert. You would think if there was a demonstration factory or a demonstration area for solar, you would have a sizable percentage of electricity being developed by solar, but it's just not the case. So yeah,
definitely not. Yeah, the government does want to do that. We do have the Atlassian co-founder Mike Cannon-Brookes, who's really trying to spearhead this move to put Australia on the map and have us be one of the world's biggest providers of solar energy and also wind as well. There's also another company in Australia called Fortescue Metals, and they've got a multi-billion-dollar industry set aside just for renewable energies. At this stage, there's currently a small proportion of mass-scale commercial electricity being made from solar, but we are increasingly seeing a number of households pivot to solar, and this is why the electricity companies in Australia are making less money, because more households are providing their own fossil fuel, providing their own electricity from the sun.
So, John, thank you for being the master of ceremony here. You did a great job as always, Mr. Smooth, as we call you in Saxo.
That's the first time I've heard that, but okay.
We have internal and external macro meeting with clients, and we always end on trying to be a little bit concise and drawing some conclusions. So I want you, John, to start the end of this conversation by saying, okay, Mr. Hardy, look at yourself 20 years from now. What is the one thing you either wish or hope or want to invest in that makes a difference? You only have one shot of sort of how do we make a difference in 20 years, or what do you want to see?
Yeah, not sure I want to see a picture of myself in 20 years, but what I might look like then. But I think if I take that question as seriously as I ought to, I think that I've put 4 children into the world, and I'd like to see a world in which a lot of these processes we've talked about that have accumulated over the last 30 years have driven a really lousy inequality. And it's not just inequality between rich and poor, it's a huge inequality in the opportunity set for this upcoming generation. My oldest being in her early 20s, youngest being 9 years old. They're not set to get on the ladder of life very well because of our current asset prices, getting on the housing ladder, etc. So I hope we figure out a way, you've talked about productivity, but to put it in concrete terms, to get the right incomes for the right jobs for the right generation coming up, to give their income so they have a quality of life that is better. And in that quality of life, it needs to be climate positive, number one, so that we're not handing over a boiling world to them. And that's I don't know where I'm supposed to put my money in that, but that's what I certainly hope happens in the coming 20 years, is there's a better outlook for the younger generation.
How about you, Jessica? 20 years from now, what do you want to see?
I think just picking up, I was actually thinking about sustainability. So I think we all need to be a bit more sustainable. Having a few conversations earlier today, I realised just simply starting with what we eat, nothing is sustainable. So we live in a throwaway society. So everything from plastics to the electric vehicles, batteries. So in order to reduce our environmental footprint, I don't think that is being answered. And if that is answered over the next 30 years, I think that'll be a huge achievement.
Kim?
One thing that we touched upon a little bit, and you, Peter, also said, water. I've been talking for this about a couple of years, and a couple of years when I mentioned the first time in Saxo Bank, I was laughed at, and I said, look at water. It's going to be, next couple of decades, it's a scarce resource, and it's getting worse. So if I want to invest, that would probably be there. And with Michael Burry, who did The Great Short, he actually did that after I think if you've seen the movie, it actually says in the after script that now he's investing in water. And it's not only because of climate change, but also because we are more people, we are consuming more, and everybody wants to have a green lawn and everything. And also, I've been heavily invested or trading in alternative energy. And when we talked about bubbles earlier, that was a massive bubble a couple of years ago. Well, actually in 2021, massive bubble going into it that imploded, probably with the interest rates going up and everything. But it's coming back now. And which one is the winner? I don't know. But you can be sure that I will look for them. And one of the ones we have seen recently going up by, 150% is ocean waves energy. So maybe that's the way. I don't know, but I'm quite sure there will come others that are maybe not invented yet.
Mr. Garnery?
So when I was 10 years old, I went to London with my parents for the first time, and I clearly remember it was just at the dawn of the computer age, or at least from where I was. This is 1995, and I was standing in this gaming shop, and there was a computer game called SimCity 2000. So it was looking 5 years ahead. And when we got home, and we didn't have a fast enough computer, so my dad had to buy a new computer so I could actually play the game. And I played SimCity 2000, and you build this city, and when you get to a certain point, at least in this game, you get to the most advanced energy source. And after nuclear power, that was fusion. And I remember because back then I had just started getting the first early physics lessons in elementary school. And my dad always had this illustrated science magazine, so I was also reading that, and they had these wonderful small pictures. And I was like, what is fusion energy? And then it sort of popped up as well in physics classes and in this illustrated science magazines. And I remember, because I was really a physics guy, I had it at A level in high school, and for a long time I actually thought that I was going to be a physicist, and I really always loved the idea of fusion energy and this whole plasma thing. And well, life took a different direction for me, but it's always stayed sort of as a dream for me, because I mean, what is more cool than creating a sun on Earth and getting a clean baseload to because I think fundamentally, I think you will agree with me, John, that if we look at our civilization and especially in the past 300 years, when we went from burning wood to discover thermal coal, and then we had oil, we had gas, nuclear power, all these things. I mean, each step we take up the ladder in terms of high living standard and productivity is along an energy arc, and I think we are at the cusp of new technologies. And so for me, a childhood dream would be in 30 years to see fusion power at a massive scale, solving a lot of the issues for the world, unleashing desalination for water, vertical farming for sustainability, and a self-reliance on food. All these things, it would be absolutely amazing.
It's super interesting. You all want to be saviors of the world, and to some extent I do too. So 20 years from now, if I was to start a new project now, it would be to educate school children on the value of a constitutional right and a constitution. If you look at the richest countries in the world, Australia, Denmark, Sweden, Germany, Netherlands, the only thing they have in common is one thing. It's a very, very strong constitution that secures the equal right for education and social benefits and Medicare and other things. And I think that's number one. So I've been teasing, although my children are grown up now, for a long time I've threatened to actually cancel Christmas because, maybe I've upset some people here, but I have a hard time understanding the principle of God, and particularly if God existed, why would salad then be so distasteful as it is? I mean, if God existed, I'm sure salad would taste much, much better, but that's my own God theory.
Or your salad chef, that might be the issue.
My salad chef needs to improve. But so I tried to get my children to abandon Christmas, but they thought impractical for two reasons: no presents, and number two, of course, in the case of Denmark, the constitutional celebrations is on June 5th, so it didn't really work. But unlike all you, I don't believe in the sort of. I don't think the process is one where we need to invent anything. I think inside the next 10 years, if we wanted to, we can solve all the issues we have. Marginal cost of energy to zero will solve all the world's problems. It will be the most productive ever. I mean, it will be, remember we got to the moon with 512K. Your iPhone or your Samsung right now can take you, 10 times the distance and million and trillions iterations more complicated. So 512K to get to the moon and we can't solve for energy? Come on, that doesn't make any sense. So for me, the number one project is for people to understand why a constitutional framework is the strongest ever. And for the record, I think it is under the most attack in Denmark even, but certainly in the US and other places as well. In Germany, lots of places, Hungary, Turkey. I mean, without a constitution, we are lost. Because at the end of the day, and this is my final bidding for this idea, is that I think, in the strongest ever way of connecting people in history was the co-op movement in the UK and in Scandinavia and everything else. This concept that when you, in the 1870s, the early 1900s, if you were in Bristol and you needed a loan, and the local bank couldn't do it because it didn't have the size of it or whatever, then the local business people would all chip in and they would create a sort of a business there. Now, the same Bristol guy needs to go to London to go to an international bank that sends it off to a headquarter in New York, puts it in the computer model and says, no, thank you. You know, we need to get back to where people actually have trust in each other, has trust in communities and where they build. So I believe in platforms, I believe in technology, I believe in innovation, but at the end of the day, the only thing we got left is the constitution and the interpersonal relationship. And I think the big winners in the next 20 years are people who can take all of the things you guys talk about and make it a personal trust, not bespoke, but a personal trust where you feel included, not excluded. I think that's pretty much sums up what you all talk about. There's an exclusion of people, the young people getting onto the ladder. There's an exclusion on ideas because we need to be conformed. So for me, constitutional, educate people should be, you know, a whole subject in school to understand why a constitution is important. And number two is why, you know, doing things as a cooperative thing is much, much better than individual. And I think to be honest, our team is a great contributor to that idea that, you know, you're all super smart people, and I benefit from it, but at the end of the day, it's the strength of the team that makes the product.
All right, that's been our roundtable for today. 30 years of trading and investing in the markets and what the coming decades may bring. Let's hope they're prosperous ones for us all, and we hope you enjoyed the discussion today.
Well done.
Great, John. Bada boom.
Thank you, everybody.